Hi everyone, welcome to this month's trading video of Mind Money Method. And this trading video is going to contain, really, we're just going to go through the dollar index as we've done in the past and go look at a few currencies related to the dollar index and perhaps maybe one or two commodities. We don't want to keep this video too long. We'll keep it short and sweet, but in any case, here we are. We are looking at the dollar index today, and we can see, and I've spoken about this in past videos, about this key level of the 9400 mark, and what we were expecting, the dollar index to do, and potential to have a look and see. And it was proposing as a key area. We saw, if we minimize this, look at all these touches, and this is why I say it's been a key area for quite a period of time since really about really May 2014 all the way to where we are right now. And we can see that around about the 3rd of May we had a dip all the way down and it broke out, and it was looking like, yeah, it was going to continue. It was definitely looking that we had broken that support level, but then what happened was we came back and the dollar strengthened, and it's gone right past it, smashed through it, and it's continued to go up. So if we looked at it as we do like to do, because we don't just like to look at one chart, we looked at it over multiple time frames, we can see that we're seeing the same thing. That we've had a few weeks that we have had the dollar index pushing on an upward trend towards the upside, so the bulls have been in charge, and over the last month it's been pretty strong from a dollar perspective. So if we had to go look at potentially what other related currencies are doing, we will see that kind of the mirror effect, if you want to call it, the Australian dollar to the US dollar. The Aussie dollar has been losing quite a bit of strength to the US dollar. Now, what is this relating to? Well, we look at the technicals, really. We know that there's everything going on in the States with the elections, and who's going to come in charge, who's going to be the next president, and obviously that may sway where the dollar's going to go for a short period of time, but the technicals will always rectify itself, and that's why we always persistently look at the technicals. We are aware of some of the news announcements going out, of course, and that forms part of the fundamental analysis. However, from a technical perspective, we like to make sure that we have multiple time frames in agreement, optimal chart structure, and that we can choose the highest probability of where price action is going to continue, either upwards or downwards. And we don't really like sideways trends, so this is a strong downtrend. This is something we would look to trade as long as we have multiple time frames in agreement. So right now, as it stands, looking at the Aussie dollar, if I were going to look at this, I certainly would be saying, yeah, I'll be wary where we are right now. Potentially, it could still keep falling. Absolutely, it could. But we are quite, into this downtrend. So one needs to make sure that we can continue on the downtrend. For me, for now, potentially there could be a setup over here. If we had to look at this on the daily chart, it's close to the moving averages. Potentially we could even, if we were looking at our moving averages, it is certainly showing that we're still on a downtrend. Our indicators are showing, I would say that's convergence. Wouldn't say there's too much divergence taking place. Potentially you could do something very tight, an entry over here with a stop over here, and your first limit order exit out there, and then the next one over there. So potential trade that you could look at the Aussie US dollar. And if we had to move on and look at, let's go have a look at what's happening with the New Zealand to the US dollar. So this is slightly where we see the actual Kiwi dollar. Really, it's we had a level over here. I can see it's quite a few touches along this level. Look at that. It's bounced off. It's holding. It's forming a support line over here, where the Kiwi dollar is really. There's not much going on in terms of this, and I certainly, yes, it's been in a downtrend and still pushing down, But for me, that's not optimal chart structure. I don't like the long, big candles, the long tails, the long wicks. For me, it's a messy chart structure, and it's not something that would interest me. So no plan for that particular pair. It's not something that I would particularly look at because I like optimal chart structure. I like the liquidity in the market. Not to say that there isn't in this pair. However, I just don't like the candles, the big wicks. It doesn't. It's not something that fits my trading rules. So my trading rules, part of my rules is I want smaller candles. I want the optimal chart structure, and that fits as part of my trading plan. Others out there may be different, but for me, that's how it works. So no plan for the New Zealand to the US dollar. If we had to go and look at, say, let's go look at another one, which I know is the US dollar to the Canadian dollar, is I actually made a video. If you go look some of my previous videos, you will see a while back, I think it was in the market where I called it that I was going to enter in around here. And in fact, look, I've still got some levels marked in here. But I actually called it, and I did. We went all the way down. It was a fantastic trade. We took it, and I pretty much got out. I think it was around about over here on the 29th of April, somewhere around there, got out. So I had a good about a 3-1 or 4-1. So it was a great trade. But then look what happened. I got out at the right time. Price pushed up, the US dollar strengthened, and we shot right back up. And the US dollar strengthened quite nicely against the Canadian dollar. So, but we look at this overall, you will see it was a fantastic trend, and it got us to a point where there was, I wouldn't say it's a key level at all, but we were in a good trend, but our indicators had started to diverge, and I looked at other ingredients, if you want to call it, or other technical indicators that made me get out in the market, and I did, and I got out at time. And once again, these are the things we teach you at Mind Money Method, and we can always help you, is to try and get to learn when is the time to get out the market, and when is the good time to obviously get into the market, but most importantly, when is a good time to get out the market, because sometimes the emotions can get part of us where we will want to make more money. We'll get, maybe potentially, it's a strong word, but yes, we'll want to get a bit greedy, and that's not always the best play. So it's about understanding your emotions, emotional intelligence, dealing with that emotional intelligence and making the right decisions based on your technical indicators. So folks, really, I'll go on to one more, which will be a commodity, because to be honest with you, as some of you already know me, I can speak for hours. But look at what's happening with gold. We've had a strong downtrend over here. I can assure you that silver will be doing the same thing, because a lot of the time silver is very related to what gold's doing. Normally gold leads the way, silver tends to follow shortly afterwards. But if we had to look at this overall picture here, because right now it looks a bit messy, there's been a strong uptrend. We've come here, some consolidation taking place, really messy, and I would never trade a chart like this whatsoever. But I certainly am keeping my eye on silver and gold at this point in time. They have pulled back quite strong after some extremely strong uptrends, but my overall view for these two commodities is that I see gold and silver, specifically on the silver side, pushing to the long. So for the bulls being in charge, and I see that we potentially throughout the year or so, that we're going to be pushing back up to the 17, 18, 1.9, 1.8 level. So there's definitely room, but right now it's more of some sideways consolidation. It's nothing, but I will certainly, if I have to mark this, be keeping my eyes on what's going on at these levels. So I'd say that's kind of the range that we're in at this point in time, but I will be definitely looking at when it gets to the 1.3 level and set alerts over here to see what's going on. If it breaks this level, forms a bit of from what was resistance to support, potentially we're going to keep pushing on upwards. So, my plan is to keep an eye on what's going on. Nothing of interest for me right now this week, I'll be honest with you. I've been in a few trades, but I'm kind of backed off this week, and I'm just busy stalking the markets and listening to my trading plan, sticking with what my trading plan tells me, and waiting for the most optimal chart structure, as well as the highest probability for entries into the markets. There's always entries, but sometimes we don't have it in a week. So what? Stalk the markets and make sure you get the best chart structure. Make sure you get the best entries. And folks, I hope this suits you well. Once again, go look at our website, mindmoneymethod.com or .co.uk, and we are always here to serve. And I wish you all a very good trading week and month ahead. Have a great day wherever you are in the world. Cheers. Thank you. Bye-bye.